All right. Hello, everybody. Hope everybody's doing well. Palantir earnings are out. The earnings are out, and we are about to start discussing the earnings in as much detail as we can. At 8 o'clock, we are going to have the live stream by Palantir, and I'll be live streaming that. So we'll talk more when that happens. A lot of different things to dive into on these earnings. I think we got a letter to shareholders as well. So we're going to be talking about that from Alex Karp. Let me make sure the audio on this is pretty good. Let me know if the audio is good, everybody. And then we will begin. Yes, audio is good. Okay, audio is good. Good. Okay, so let's get into some of the stuff that we have going on. First, let me just tweet that I am live. Look, it's not a horrible quarter. Definitely not an amazing quarter. I think it's pretty flat, to be honest, and that's kind of shows it with the growth, even though a lot of the growth is good now. But it's not absolutely horrible. So let's audio is good. Palantir is that's the theme of this. Okay, so let me share my screen to the Q2 business results. I mean, this is the main thing we got to talk about, and then we're going to start getting deeper into them. So let's start off with the beginning. All right. First of all, actually, no, let me share the financials because that's a better, broader outlook, and then we'll get into that. Okay.
Yo, what up, bro?
Hello. Okay. Say something.
Can you hear me? Hello?
Hear you.
There you go.
Yeah, your mic might be muted.
Oh, hold on. What?
No.
Can you hear me now?
Yeah, it's low. Increase it a little bit.
Yeah. There you go. How does that sound?
It's. Oh, my mic was low. Never mind. My computer was.
I was like, oh, that's weird.
All right. What are your raw thoughts? You've been up a little earlier than I am. What do
I
you think?
shouldn't have sold my goddamn puts.
You
I
shouldn't
would
have
have
sold your
been.
puts.
I would have been good. I would have been real good. You know. It's all
What do you
right.
think? So 26% revenue growth, US. I mean, growth is not crazy, but it's not like we missed expectations. How are you feeling?
I mean, to be honest, guys, a lot of this stuff was expected. We're heading into a recession. Do you think businesses are like, oh yeah, let me go get this product that isn't going to deliver me business value right away? Like everyone is figuring out how to cut stuff. You know, Palantir is going to have a much harder time selling its product because it's a discretionary product. All right. This is nothing that a business has to um, basically rely on to make their business operations work. So when it comes down to it, you don't need Palantir to keep operating. Right now, most companies are trying to figure out ways to make the cash that they have on the balance sheet work without adding a new product. Anytime you add a new product, there's implementation costs, there's hiring, you have to hire people to support the product, and then you have to send people out for training. Like it's a lot of stuff that happens whenever you get a new product. So a lot of companies right now during a recession, they're not going to be looking to add discretionary products like Palantir. Not until we see some recovery away from this recession do I see. But if you look at these numbers based on the lens that we're in a recession, they're actually pretty good numbers. You
That's
know,
what I was thinking.
yeah.
Yeah, I mean, so some highlights here. We have
Whoa, you're kind of loud. Hold on, maybe it's me. Just let me turn down my headphones. There you go.
it might be me as well. Let me make sure I'm not
Yeah.
too crazy. No, yeah, it's probably you. It's probably you. To be honest. So it's not that bad either in the context of revenue growth, right? So obviously 473 million, they beat expectations at 472. So we got that. I thought they might hit like 480, but at 473, that makes sense. US revenue growth 45%. I thought that was great. The biggest stat here was this one, right? US commercial customer count increased 250% year over year. Went from 34 to 119. I mean, that's not bad, right? To increase that 250%, especially in the face of recession. I know you've been saying, and your whole point has been, this is not software that is absolutely needed. Like it's good, but it's not. So selling during this time, it's not like you're selling water. It is still something that's hard. Margins at 13% from free cash flow, cash from operations. The highlights, we had 314 adjusted free cash flow, 18% margin, trailing revenue of 1.04 billion. And then their outlook, they expect, how did you feel about Q3 revenue basically being flat, no growth quarter to quarter?
I mean, it's the recession, dude. It's hard to make sales. It's hard to have net ads during that time. I mean, dude, everyone is seeing it. Yesterday, when we had the conversation about ad revenue from YouTube, right? You're seeing it. I'm seeing it. We're getting less work. So it's just a matter of the recession. So I think everyone just take a step back. um, right now, businesses like Palantir, they need to do exactly what they're doing, which is investing in future growth. That's why this hiring thing, I was so curious on Friday why they announced it on Friday and not today. Well, I know exactly why. My gut told me that they probably have some bad news coming on Monday, but at the same time, I didn't want to risk, them having a great quarter, and that's the reason why they were adding more people. And and Sachin did make a fair point when he said that they didn't want the hiring to just be like a footnote. So it made a lot of sense. But I do wish that you know what? Let's wait until the actual like earnings presentation because I really want to see what they're saying. I want to see what how Carp is going to interpret this for us. Because if it was me, I would just say that look, we're in a difficult time. We're in a recessionary environment. We are going to do everything we can while others are pulling back to move forward and to invest in our growth in the future, and that will deliver shareholder value over a long period of time. I think that's the message that I want to hear. If they say, well, we tried, and it's like this backward looking statement, then dude, we got problems. But I don't think they'll do that. If they were backward looking, like a lot of companies right now, they've cut down hiring. They're taking a step back from spending on expansion projects. Palantir doesn't seem to be doing that, and I think a lot of the revenue that they would have gotten from the government, that's going to be recorded in the future. Very
Yeah.
few times does the government revenue get recorded right away. The government's always about we'll pay you in the future, not today.
I mean, I don't think they're gonna have a defensive attitude on the call. So they said this is the last. I don't know if you saw any part of the shareholder letter Karp put out. We are working towards a
Yeah.
future where all large institutions in the United States and its allies abroad are running significant missions and segments on Palantir. Most of the companies are targeting small segments. We see an intent to capture the whole. Um, they seem pretty. They go through some numbers here, but the first part is a new company is emerging within the one we have built. They seem pretty bullish on the growth. I mean, obviously they highlighted the best parts of their growth in their shareholder letter, stuff that looks positive and to the right.
Yo,
But
Carp
we
needs to eat some humble pie, bro. That's the dumbest thing that I've heard. Oh,
what? Wait, which part? Which
we
part?
only care about big customers. We don't care about small and medium size. Bro, small and medium grow into big. Stop being a fucking jerk off and being like, well, no one's important enough to use Palantir. Stop that shit. Be humble. We're looking for every opportunity that gets presented to us because we believe that we're going to grow with our customers. Not this nonsense with, oh, we only look at big companies because that's who we work with. No, look at fucking everybody, dude. Expand your user base, expand the number of companies that are looking forward to using your product. This nonsense with, oh, we only work with the biggest people, bro. That's such a loser attitude. I mean, if you look at like Joe Lonsdale and his American Optimist stupid fucking podcast, right? That shit is
Didn't you like the podcast? Why are you saying it's
it's like
stupid?
it's like fucking 8,000 people because he doesn't bring on normal people. Like he just brings on the fucking like elite, and then you expect fucking people, like down to earth to give a shit. Come on, like dude, you should not be turning down business. No one should be turning away business. Okay, especially during a recession. Everyone is important, whether you're small, big, large, micro. Get your ass on Palantir. That's what we need to hear.
Yeah, that's fair. Um, I think yeah, this part we have only recently begun to capture the value of those more refined and productized software platforms. I think this is the part you're talking about, right? The thin versions for a variety of different early groups of customers that are not just big companies. So they're trying to get it over there. So that's there. It doesn't seem like they have a sort of sorry attitude. I mean, this seems like they are bullish. It's just in this type of economy. I think your point is the correct one. It's like it's hard to generate revenue right now, especially for a company that's not, Salesforce. You don't need them necessarily at this moment.
Dude, last year you were fucking investing in SPACs that are like the most riskiest small time. And now all of a sudden you're like, oh, we only work with big customers. Shut the fuck up, dude. Last year you were paying people to fucking use your product. This year you're like, no, no, we're not about that anymore. We're only about big customers. Dude, Alex Karp, eat some fucking humble pie. All right. And get with the program on how to do software sales, which is you sell to everyone who wants you. All right. Not, oh, we only work with a select group of people. You know, that's whatever.
Well, your puts would have printed. So
I did.
where's
I do have some covered calls that I sold at 10, which, I mean, but it's not like a significant amount. I only sold a little bit, but whatever.
let's look at the share price because I haven't even checked it really. I know it went down, obviously.
It's like 15% last time I checked.
Uh, wow, why doesn't Google show pre-market?
It does. It's right there.
No, but it's
Right up.
showing 11.
No, that you see it at the top right, top left. There it is. You see $1.46 down. Look up.
Oh,
Red.
okay, right there, right there. Okay, pre-market 9.99. Okay, got it, got it. Interesting. Yeah, I mean, I also think there's a lot of people that want to buy the dip on this, right? Like me.
Yeah.
Oh, Sachin says send him the link. All right, Sachin, I'll send it to you right now. So do you think we can test those levels that we tested back when S&P was at 360 again, even if the S&P doesn't get to 360?
Maybe. I doubt it, but maybe. I mean, DCA, bro. That's all I can say. Easiest way to not cry about things like this is just a DCA, so that you know times like this. Me, I'm like, I have cash sitting in the background. Just, oh yeah, you know what? If it went down, perfect. I'll buy more. You know, I do think that the growth prospects are there, but dude, leadership and management are fucking doing a piss
Do you
poor
do you,
job of
do you think
selling their
Carp's gonna be on
product.
the call?
Yeah, he's gonna be on the call. Why wouldn't he be?
You don't. Carp wasn't on the call last time. Oh well, he did that little monologue, and
Mm-hmm.
I don't know if he's gonna be on the
Yeah,
call.
you need for a bad quarter. Well, I don't want to bad, but with an okay quarter like this, you need some reassurance from Carp. I don't think you're gonna be able to skip that.
I
You know.
I don't know if he's gonna be live though. I think they might do what they did last time. They might give him a little interview and monologue, and then they put Sham up there, which would suck. I would want to hear
Mm,
from Carp.
dude, we need to stop like aggrandizing this guy like he's some kind of infallible Yoda like figure that knows all. You know, Carp at the end of the day, after 17 years of running a company, hasn't done the most optimal job. You're talking about so much funding that's gone into this company, so much capital, and he hasn't exactly done the best with it. I know everyone's like, oh, well, Palantir is a $20 billion company. Like, yeah, but literally the amount of money that was invested in Palantir is a net almost $20 billion over the course of 20 years. Right. So at the end
Mhm.
of the day, the guy didn't grow a business. You look at so many other businesses that they took from $100 million investment that's turned into $1 billion, $2 billion, $10 billion companies. This is a company that 20 billion was invested and the value is still $20 billion. So I don't know about what a lot of people like find so interesting in Carp, that he's some kind of like 4D chess playing magic dude. But in terms of ideology, I think he's great. I think he's got the right mindset to be a founder and to cultivate a following. But in terms of actual business acumen, dude, philosophers don't translate into good CEOs apparently.
Hmm. I sent Sachin the link. Sachin, you got the link if you're watching. I sent it to you. Why is Chris such a hater, bro? I don't think Chris is being a hater. I think he's just, being
Being
honest
a
right now.
realist, being a realist. At the end of the day, I'm telling you, if you look at some of the other CEOs out there, who who really know how to run a software company like a SaaS company, they do an excellent job at selling, right? I told my instinct tells me Carp is great at getting people to do stuff, but that doesn't necessarily equate to business value that gets generated in the future. Like I'm telling you, read the book "Amp It Up" by Frank Slootman, and you'll understand what the difference between a founder is and someone who's a CEO that's going to be able to capitalize and make things really, what is that they call successful. And that's why if you look at Snowflake, Frank Lumen did not found Snowflake. They brought him in because they realized that the founder was great at building the product, but not not capitalizing to a degree that someone like Frank Slootman was able to bring on. So, like I said, everything at the end of the day, no matter how people want to interpret, everything, what's the word? The shit rolls downhill. Everything is the responsibility of the CEO. So if Palantir is weakening, that's nobody's fault except Karp's, and he needs to say that out loud. So yeah, it's my fault that we're fucking slowing down. It's my fault that we made decisions that were contrary to growth. It's my fault that we missed out on industry trends over the last 7 to 10 years, and we're still trying to catch up to people. I mean, dude, it's one thing to come out and say like, "Oh, we had this product 10 years ago," and not say at the same time we missed opportunities. Which he did, by the way, say, but he didn't. At least I felt that he wasn't strong enough in changing that mindset. And like I
Sachin, you're
said, yeah, that comment that I saw on there, stupid
Sachin.
comment.
We have like a minute to the live stream, so your thoughts on this earnings?
I mean, the numbers are disappointing. That's all I can say. Because, like I said, at the end of the day, it's all about that how big they can make the pot, and the numbers are just coming barely above guidance. I think when we look other companies in this domain like Datadogs doing some portion or Snowflake, I think they are doing better in terms of revenue growth. So in terms of revenue growth, there's definite uh, there is definite concern. Okay, I think we are going to start the earnings now. Back to you guys.
Yeah, let me share my screen, and we'll pause in between if we have anything to say for it.
Second quarter 2022.
Try not to pause. Just go with it.
We'll be discussing the results announced in our press release issued prior to the market open and posted on our investor relations website. During the call, we will make statements regarding our business that may be considered forward-looking within applicable securities laws, including statements regarding our second quarter and fiscal 2022 results, management's expectations for our future financial and operational performance, and other statements regarding our plans, prospects, and expectations. These statements are not promises or guarantees and are subject to risks and uncertainties, which could cause them to differ materially from actual results. Information concerning those risks is available in our earnings press release distributed prior to market open today and in our SEC filings. We undertake no obligation to update forward-looking statements except as required by law. Further, during the course of today's call, we will refer to certain adjusted financial measures. These non-GAAP financial measures should be considered in addition to, not as a substitute for or in isolation from, GAAP measures. Additional information about these non-GAAP measures, including reconciliation of non-GAAP to comparable GAAP measures, is included in our press release and investor presentation provided today. Our press release, investor presentation, and SEC filings are available on our investor relations website at investors.palantir.com. Over the course of the call, we will refer to various growth rates when discussing our business. These rates reflect year-over-year comparisons unless otherwise stated. Joining me on today's call are Alex Karp, Chief Executive Officer, Sham Sankar, Chief Operating Officer, Dave Glazer, Chief Financial Officer, Ryan Taylor, Chief Business Affairs and Legal Officer, and Kevin Kawasaki, Global Head of Business Development. I'll now turn the call over to Alex.
In the last 3 years, we have grown Palantir from a 743 revenue business with hundreds of millions of dollars in actual loss to, in the last 12 months, a $1.744 billion business with 300 million in free cash flow, which represents a 41% CAGR. 41% CAGR on a business that is now in its 18th year is very unusual. There are many reasons for the strong growth, but you live by the same sword that you pay the price for, and we deal with very, very large contracts. And the USG has some of our largest contracts, and they have been pushed out. But because of uncertainty toward the end of the year, we're revisioning guidance down to $1.9 billion. I personally remain very optimistic that the next 3 years will look a lot like the last 3 years, again, where we took a money-losing business and made a business that throws off free cash flow, where we ended up, as of today, with $2.4 billion in the bank and no debt. And that the large and chunky nature of our contracts will continue to be in large part an advantage because these contracts do not disappear. Sometimes they are put off. Sometimes they take too long for us to get them. But at the billion-dollar range of the contracts that we are working on, they have the bug of sometimes taking too long and the feature of, in a highly difficult, tumultuous, and politically uncertain world, that you actually get paid and you actually make free cash flow. Moreover, we have 5 of the most interesting, important, and crazy baller, impactful products in the world. PG, Foundry, Nexus Peering, MetaConstellation, and Apollo, all of which were built before their time, all of which have made a 41% CAGR possible. These products should be measured not just in their ability to throw off free cash flow, to generate outsized revenue, but most importantly, in their quintessential attribute that large companies, which essentially control distribution, cannot easily copy them, or if at all, they're too intricate, difficult, and thick to be replaced by larger incumbents and then distributed through their distribution chain. In the end, all software products actually have to be measured by, is this replaceable? How easy could it be replaced? Is the underlying platform durable or fleeting? And could a third party, highly technical with massive distribution, disrupt these products? If you look closely at PG, Foundry, Nexus Peering, MetaConstellation, and Apollo, as different as they are, they have one thing in common. It would take many, many years of the world's best engineers to build them. And you would be building them as we've improved them and as we capture the market. Thank you.
Thank you, Alex. We have the great privilege of being on the forefront of the problems that matter most in the world, from the war in Ukraine to fighting famine and monkeypox. Across government and commercial, the opportunity in front of us is enormous, which makes the revised near-term outlook all the more disappointing. It doesn't come close to representing our ambition and the opportunity before us. While the timing of large contracts in government can be frustrating, the underlying requirements and needs are enduring. It's worth noting that our revised guidance excludes any new major U.S. government awards. At the same time, we have seen the opportunity presented by this environment before. As organizations around the world face more pressure and experience more pain, there will be a slowdown in the rate of spending and lengthening of sales cycles. But it will also reveal gaps in enterprises' operations, gaps our software can solve. In the short term, this means less revenue now, but on longer time horizons, it accelerates our business. The global financial crisis, ISIS attacks in Europe, the COVID pandemic. Through each upheaval, we emerged substantially stronger by investing in our customers ahead of revenue and delivering results in days, not months. It is exactly in times like these that we build our most important and most impactful partnerships. Each of these periods has been an inflection point for Palantir, a time during which we developed path-breaking software platforms and expanded our footprint. To our results. We generated $473 million in revenue in Q2 2022, representing a growth rate of 26% year over year and 6% sequential. Our customer count increased to 304, up from 169 a year ago. Our business in the United States alone generated more than $1 billion on a trailing 12-month basis, representing 42% growth. I'll now hand it over to Shyam.
Thanks, Ryan. Our revenue growth in the U.S. commercial market continues to be our focus and is gathering momentum. Our U.S. commercial business grew 120%, rising from $39 million in Q2 2021 to $86 million this quarter. Our core U.S. commercial business, which excludes strategic investments, grew 10% quarter over quarter or greater for the past 4 quarters, most recently reaching $67.4 million, 14% sequential growth. Our core U.S. commercial ACV grew 2.4x, our best quarter ever. Our U.S. commercial customer count grew from 34 to 119 customers year over year. Our overall commercial revenue grew 46% and continued to increase for the 9th quarter in a row on a quarter-over-quarter basis, reaching $210 million in Q2. We are seeing former customers, particularly those in the US, including Some of the world's largest transportation, banking, and retail enterprises return to our platforms in increasing numbers after periods of experimentation with other platforms and approaches. These customers, they're not returning to our software platforms merely because of the expansion of our sales operations, which does continue. They're often returning because they have tried other options, and those options have failed to deliver needed results. Our commercial business in Europe and elsewhere outside the United States continues to expand as well, although the exceptional strength of the US dollar has been a factor given the significantly increased effective cost of goods. Our government work remains at the center of everything that we have built and everything that motivates us. The expansion of our reach with agencies working on the front lines of conflicts around the world, including in Eastern Europe and the South China Sea, continues. The contracts we have in our pipeline are key to facing the challenges in front of the West. Our government business grew to $263 million in revenue in Q2, rising 9% quarter over quarter. More broadly, across the commercial and government sectors, healthcare has become a substantial and rapidly growing business, generating approximately $153 million in revenue in the first half of 2022, up from $42 million in the first half of 2020 at the onset of the pandemic. That represents a 91% compounded annual growth rate. We see substantial opportunities for Palantir as a healthcare technology company, driving transformation across major pharmaceutical companies, biotechnology companies, insurers, providers, regulatory agencies, and research organizations, building on our work with organizations such as the UK's NHS, US HHS, the CDC, the FDA, the NIH, Sanofi, Merck, and Sompo's healthcare business in Japan. Our software products and platforms continue to operate behind the scenes in connection with some of the most significant events around the world, including the distribution of vaccines to millions and an ongoing war in Eastern Europe. One of our most recent offerings within Foundry, a no-code application development environment known as Workshop that allows users with little or no coding experience to build operational applications on top of data warehouses within minutes, is showing particularly strong growth, with more than 10,000 developers now building applications within the platform. And our most recent offering, Pipeline Builder, brings this same no-code approach to authoring data pipelines, turning every business analyst into a production data engineer in Foundry. We just launched an experimental feature that leverages OpenAI's GPT-3 to turn natural human language into pipeline logic. A sentence like, "Find me all the hospitals that have limited ICU bed availability in the next 3 weeks," is transformed into a pipeline in seconds, a new standard in no code. Forrester named Foundry the leader in AI platforms as part of the Forrester Wave AI/ML Platforms Q3 report. Palantir's Foundry operating system received the highest possible scores in the product vision, performance, market approach, and applications criteria. Turning to Gotham, urgent operational needs are driving innovation in our integrated hardware software offerings, building on products like Titan. SkyKit will combine Palantir's Meta Constellation software on a small, human portable form factor with Starlink comms to enable heroes in the field to task low latency, AI-driven satellite collection. Our focus in the short term remains on making our three principal software platforms, Gotham, Foundry, and Apollo, available to broader segments of the market with unbeatable time to value. I'll turn it over to Dave to take us through the financials.
Thanks, Shyam. As we've highlighted, our US business is remarkably strong. US revenue grew 45% year over year to $290 million, and on a trailing 12-month basis, US revenue grew to $1.04 billion. US commercial revenue grew 120% year over year to $86 million. Our core US commercial revenue, which excludes our strategic investment program, grew 14% sequentially. On the customer side, our net new US commercial customers grew 16% sequentially. US government revenue increased 27% versus the year-ago period to $205 million, up from a 16% year-over-year increase in the first quarter. Turning to our global top-line results, second quarter total revenue grew 26% year-over-year, ahead of our prior guidance to $473 million. Our overall net dollar retention was 119%. Commercial revenue increased 46% year-over-year to $210 million. Government revenue increased 13% versus the year-ago period to $263 million. Our global customer acquisition remains strong. we added 27 net new customers in the second quarter, bringing our Q2 2022 customer count to 304, an 80% increase year over year. We added 19 net new commercial customers, which represents 157% growth year over year. Our growth with existing customers also continues to remain strong. Trailing 12-month revenue from our top 20 customers increased 17% year over year to $46 million. Second quarter billings were $396 million, up 5% year over year. In the second quarter, TCV booked was $792 million. US TCV booked was $588 million. As Alex mentioned, we saw that large new USG contract awards have been pushed out. While government bookings grew quarter over quarter, increasing 128% sequentially, this was primarily driven by renewals. We ended the second quarter with $3.5 billion in total remaining deal value, roughly flat quarter over quarter. Despite the excellent TCV quarter, total remaining deal value was impacted primarily by two things. One, we voluntarily terminated several contracts related to investment commitments that we decided to not move forward with. Two, our TCV number included the successful conversion of option years from a US commercial customer contract that, while resulting in lower overall deal value, secured commitment for additional years. We ended the second quarter with $1.2 billion in remaining performance obligations, up 79% year over year. As a reminder, RPO is primarily comprised of our commercial business, as it does not take into account contracts with an initial term of less than 12 months and contractual obligations that fall beyond termination for convenience clauses, both of which are common in our government business. Turning to our margins and expense, adjusted gross margin, which excludes stock-based compensation expense, was 81%. Second quarter adjusted income from operations, excluding stock-based compensation and related employer payroll taxes, was $108 million, representing adjusted operating margin of 23%, ahead of a prior guidance of 20%. Second quarter adjusted expenses were $365 million, up 11% sequentially. Second quarter adjusted earnings per share was -1 cent, which includes a -5 cent impact driven primarily by losses on marketable securities. We generated $62 million in cash from operations, and our adjusted free cash flow was $61 million, representing a margin of 13% and our 7th consecutive quarter of positive free cash flow on an adjusted basis. On a trailing 12-month basis, we have generated $314 million in adjusted free cash flow. We ended the second quarter with $2.4 billion in cash and cash equivalents and no debt. In July, we expanded our revolving credit facility by adding a $450 million new incremental delayed draw term loan facility, which provides for additional liquidity up to $950 million and remains entirely undrawn. As we highlighted last quarter, our balance sheet leaves us uniquely positioned to take advantage of the opportunities that may arise from the larger macroeconomic environment. Now, turning to our outlook, we are presently guiding to the third quarter and full year 2022. For the third quarter, we expect revenue of between $474 and $475 million and adjusted operating income of $54 to $55 million. For full year 2022, we now expect revenue of between $1.9 and $1.902 billion and adjusted operating income of $341 to $343 million. This revised guidance excludes any new major US government awards, and we believe this to be the base case. With that, I'll turn it over to Anna to start the Q&A.
Thanks, Dave. Our first question comes from Martin, who asks, when are you expecting to become profitable?
Thank you for your question. We driven by our 5 products and by our ability to control costs, mainly because we left Palo Alto, which we left primarily for political reasons, but of course Palo Alto is somewhat of a inelastic luxury product, meaning you must pay and pay and pay for the comfort of having oddly misaligned with American interest political views and in general high costs. And that combination of radical optionality on expenses and what we perceive to be macro conditions converging with product conditions allow us to kind of see what we think will be a profitable company in 2025.
Great. Thanks, Alex. Our next question comes from Jose, who asks, what is your 10-year plan for the future?
Well, we built 5 products. Those of you who follow us know them well. Those of you who don't follow us know them well because they've influenced your life, especially PG, our anti-terror product. Foundry, which is responsible for any vaccination you had if you're listening to this. If you're listening to this from America and Britain or 20 some other countries, those of you who are following the war know some of our other products, even at a distance, and a number of other products. We are going to continue to deploy those products. By the way, as you may have noticed, we've now crossed the $1 billion mark a second time. When we DPO'd, there was a real question, could Palantir cross the $1 billion software mark? This is a massive mark for enterprise software. We've now crossed this in America. We will cross that for all 5 of our products. Obviously, Foundry will be a multi-billion dollar product. We will do this in the service of the West, which we will fight to help win, rejuvenizing institutions the way we have in the past on numerous fronts. We will use the distribution network we have built to provide these institutions with new and better products. Apollo will be a multi-billion dollar product as a standalone product. Our company will be, as of the next 2 years, a 70% dollar revenue company. And we will preserve our culture. And we are going to do this our way, essentially, which is a very long-term focus. Do not expect us to be like another company. We will make aspirational goals. I think there's a lot we could learn, by the way, on modeling these goals. But we believe we're the best in the world at software for the West. And with the attributes and warts of that, we will push forward to make the West stronger and better and build a multi-billion dollar company on top of each one of our single products. By the way, we'll build new products. We're already working on a number of products. We have products like Nexus Peering that are not apparent to the world that power very important things, and we'll continue to build those kind of products as well.
Thank you, Alex. Our next question is from John, who asks, what are you doing differently from your competition that is allowing you to be successful?
Well, we're pretty orthogonal to our competition. So I wouldn't even and by the way, I would say we're less competitive with our competition than we have. A lot of people compete with us. Most of the companies that kind of are built for Wall Street, which have, perfect financials and have perfect proclamations of what they're going to hit, and very, very thin products, sales forces that are 50% of their total people. The sales in the US commercial, which are, by any standard anomalously strong, almost 80% growth this year without SPACs, total organic revenue. It's being driven by 42 salespeople. Less than 1.5% of our company is accredited. We have more, but those are the ones that have actually learned our product and are able to sell it. This is a company, we have this, and because of there's some real features, we built this product. The product is obviously ahead of the market. We believe the growth in the US, you can draw a trend line of this is doubling now again, or close, without SPACs. You could see how this could double or be in that range again next year. And again, we're doing this in a completely unique way. And so then I would also say, as like competition, one of the things that is just not paid attention to at all by the normal investing company is the very basic fact of, is this a product that will be in some ways replicated by the big companies? Wondrous, truly interesting, great companies, but that will basically take thin products and get them into their offering and have better distribution. And in fact, in the end, the products are over a long period of time relatively worthless. So you get a high growth built on back of selling equity and going into and taking the equity and buying a sales force and selling a thin product, which is no longer going to be around in a couple of years, either because it will not be useful or because a big company will replicate it and sell basically the same product. Our products are not like that. Nobody is really endeavoring to do a version of PG or Nexus Peering, which people don't understand, which is powering defense efforts globally. Foundry is very thick and is essentially hundreds of products integrated and can be and deployable quickly. You have Apollo. These are very, very unique products. And so what I would say on the competition thing is it is surprising how different we are from other people in, broadly speaking, the same space. And that has some advantages. We see enormous traction on our products. You're also getting this at a price because we run this company as owners, and we do not run it purely to actually make people happy quarter to quarter. I honestly don't pay a lot of attention to that. I'm paying attention to where will the company be in 2 years. And what will the products be like in deployment? Will they be adopted? Who's building them? How are they going to be built? And are they, in fact, in front of the market? So we have this very unique hybrid. You have to look at it as a unique company and assess it as, well, what feature set do I like? What bug set do I not like?
Great. Thanks, Alex. I'll turn to you, Sham, for this next one before we open up the call. Christopher asks, can you explain to Palantir shareholders what becoming the sixth prime for the US government and the first software prime would mean for the company? Also, what sort of timeline are you targeting to become the first software prime of the US government?
Thanks, Christopher. Our ambition in the US government, and by extension, all of government, is to be the sixth prime contractor. And that means that we're the trusted partner, capable of delivering end-to-end platforms and programs, that we're willing to invest deeply in the specific needs and requirements for these customers. But we just want to do this as the first software prime, and we already are. The way that we think about our products in government is as offerings that are built with our platforms. They're built with Gotham, with Foundry, and Apollo. The products would be, for example, at the US Army, Vantage, Titan, CD1, CD2, massive programs of record, or Operation Warp Speed's Tiberius. That's their vaccine management platform that was built with Foundry. Decipher at the CDC, Project Brown Heron at the Air Force, Warp Core at the Space Force. At Indo-PACOM, it's the mission partner environment. Titan will deliver a next generation, expeditionary, scalable, and maneuverable platform that is purpose-built to address the Army's #1 gap in large-scale combat operations, deep sensing. In simpler terms, it's an armored truck that connects to satellites and theater assets. And we are offering an end-to-end integrated hardware-software solution here. This is exactly what we're doing with SkyKit, fusing Meta Constellation, Starlink, a purpose-built compute platform to enable warfighters to task satellites from the field and receive low-latency, AI-driven detections to drive kinetic operations. Look no further than the CCP's intimidation exercises in Taiwan, still ongoing. We think this, being the sixth prime, is how we rebuild the arsenal of democracy.
Thanks, Sham. Our next question comes from Brent at Jefferies. Brent, please turn on your camera, and then you'll receive a prompt to unmute your line.
Thank you. Good morning. On the government side, I'm curious if you can address what you're seeing and some of the deals that you expected to close. Can you give us a sense of kind of timing on the government side? I had a quick follow-up question for Alex.
You want to take this, and I'll give my riff?
Sure. Look, the programs that we're going after, these are enduring programs. The competition is ongoing. The needs that we're servicing here are vital to the future of the West on both fronts of the potential conflicts. We have revised guidance given the clarity that we have around when we think we're likely to get them. And so, we continue to invest in these things. The pipeline around the government business continues to be really robust, both domestically and internationally. But we also have more certainty around what is obviously a frustrating contracting experience.
Let me give you a different riff on this. A number that I don't know if I think we shared on one of our earnings calls was that our government U.S. business has a CAGR over a decade or more of 35%. During that time, we've had a number of years that were flat. And this is frustrating. Believe me, it's more frustrating for us than anyone else because we would prefer a even lower CAGR, but having more certainty. And so, nevertheless, you can ask yourself the question, does it appear that the last 10 years were less dangerous or the next 10 years are going to be more or less dangerous than the last 10 years? So it's just a very basic view that we have. The next 10 years, the next 2 years are clearly more dangerous. America is engaged on multiple fronts. And then there's a question, does Palantir have the product market fit and access to the market? Our product, we're looking at the US business that's going to cross the $1 billion mark next year as well. This is like, so you have a $1 billion software business as of next year with positioning that has never been as good. So both our micro positioning and obviously the macro position it's so sublime. It's hard to talk about without sounding like we're kind of warmongering. And that's why I am positing internally and externally the growth in U.S. government over a multi-year period will be at least as good in the future as it was in the past. However, that 35% CAGR included a number of years where it was flat or even negative. And that's just the frustrating part about contracting at our level. The contracts are so big and meaty that you got to kind of wait.
And just a quick follow-up, when you think about the overall macro conditions that seem to be hitting a number of other software companies, can you discuss what you're seeing on the commercial side? Any slowdown there, or are you seeing the business stay pretty?
One of the things, because and I'm not exactly sure how I ought to put this, but the typical way in which a company would interact with, say, analysts is we would have these precise goals and then we go after them. And then when we're not going to get them, we would say things that we could have said on this call, like almost 40% of our business is outside of America. Every single one of those contracts is being impacted by dollars. Obviously, it's not just that people are paying us in local currency. If you're paying us in dollars, which many of them are, you've de facto paying 20, sometimes more percent more that we can't capture on our balance sheet and can't show to you. Those things are impacting our business. I would say the primary impact to our business, though, is actually positive. It's the U.S. adapts when things are bad, and it adapts very quickly. I spent a lot of my life in Europe. Europe does not adapt as quickly. And so what we're really seeing is America adapting to what we believed 5 years ago was the product of the future and buying it at a very anomalous way and beginning at scale. So we're not talking 50 to 100 to 200. We're now talking 350, 400 to 650, 750. So we're seeing the doom and gloom that is a blight on society, however one wants to call it, both economic and political, and quite frankly, the fact that legitimacy in our leaders is so embarrassingly low, it's hard to solve problems, that we're seeing that negatively impact the business and outside of America, particularly in Europe, because people are entrenched and slower on the tech acquisition side, and very, very positively accelerating our business. We seeing it in commercial, we believe it in government. And we're, yeah.
Great. Thank you, Alex. Our next question comes from Sanjit at Morgan Stanley. Sanjit, please turn on your camera and then you'll receive a prompt to unmute your line.
All right, thank you for taking the questions. Alex, I wanted to get your view, not just so much on the quarter, but sort of the longer term framework. I noticed that you guys didn't reiterate the 30% outlook. In some sense, that makes sense because deals are uncertain. But I thought it was interesting that you guys took back the 30%, which made it seem that some of the issues that you're seeing in terms of contract. I'm sorry, were you hearing the question?
Oh, no, I hear you. I was hoping to see you as well, but it's okay. Keep going. I have the gist of the contract of the
Got
question.
it. So I think you know where I'm going. I think you know where I'm going with this.
So,
the long-term 30%.
I am driving the company to get to $4.5 billion in 2025. I believe in driving the company that way, and I do not believe what I believe is that the future on USG, and by the way, IG, is likely to be at parity with the last decade for both macro reasons and because we simply have, products that we built that were not deployed because they're wartime products. So you have Meta Constellation, Nexus peering, and other products that de facto are not that useful unless you're at war. Then you have the Foundry uses, the use of Foundry in the Defense Department and another that get usage, but not the way they should, for all sorts of issues that are also in civilian. And then you have PG and the fusing of PG and Foundry was particularly useful, but you have to understand it. So I believe that we will get to the 2025 goal. I tend to view the business the way I view our most important segment of the business, which is there will be ups and downs. Again, the 10-year CAGR on USG is 35%.
Thanks, Alex. Our next question comes from Mariana with Bank of America. Mariana, please turn on your camera, and then you'll receive a prompt to unmute your line.
Morning, everyone. Can you hear me?
Yeah, we can hear you.
Oh, perfect. So my question is a follow-up on the U.S. government contracting environment. You mentioned it is frustrating. I think most of the defense services companies feel the same. However, what I'd like to hear from you is like, have you seen any change from the customer approach and the traditional approach to data rights, given the urgency today to adopt new technologies?
Well, first of all, our frustration is built on the fact that we have a very large integral. So it's like, of course, we see smaller things accelerating, but to grow off of from last year a 670 base and up into where we should grow requires very large contracts over many, many years. By the way, orthogonal to your question and not exactly what you're asking, our part of our strategy is that we are going to grow commercial to be so big and so linear, and that especially starting in the US, that in fact these vicissitudes are just less important. What you're seeing in our business now is the largest part of our business is subject to contracting. That actually is going to shift. The US business, I mean, even without doing FX currency, which I've been told everybody on the planet is doing, and I don't want to do, our European business is still growing at almost 20%. That's without FX adjustment. So then if you look at our business, which continues to just in America, again, because of this adaptation in America and a willingness to embrace things that didn't make sense 2 years ago that now make sense now, that you're looking at a business where the vicissitudes are just less important. On the general political thing, what can the West do? Of course. I mean, but we are just in a situation in the West where we have the most interesting, noble, and virtuous societies, and there is a real dearth in operational leadership. We could save money in the US government by going around saying, look, we will contract quicker, but you get paid less. That would be obviously good for everyone. That's unlikely to happen. And so what we're doing is building our business so it's less important and trying to get better at both forecasting how this will happen and getting locked into bigger and bigger and bigger contracts. But this will be an ongoing issue for Palantir. We believe the severity of it will be less every year simply because of the strength of the US and later the handoff function in Europe on our commercial sales.
Thanks, Alex. Our next question comes from Brad at Deutsche Bank. Brad, please turn on your camera, and then you'll receive a prompt to unmute your line.
Great. Can you guys see me?
Nope, but we're rolling here. You can just, we'll do it without the.
We can go audio.
Yeah, we got the audio.
Excellent. Thank you so much for taking the question. I wanted to ask about partnerships, which you've spoken about in recent quarters, particularly with government contractors and other providers to USG and global governments. What proof points are there that support your confidence that these traditional providers to government are choosing to bid on business with Palantir versus maybe coming up with their own reusable IP that qualifies for meeting the requirements of the FAR and streamlined federal
I'll let Shyam dig into the specifics. It is my belief that this space does not have comparable providers of software. I do not believe there's a single provider in the world that can produce our software. But they can produce things on top of our software that we can't produce. And I don't think this is a marriage of love. I think this is a marriage of necessity. Honestly, if they could build the software we built, they would not partner with us. If we could build the hardware products they built, or quite frankly, navigate some of the both American and international networks that they can navigate better than us, we wouldn't partner with them. Now, the specifics, Shyam is very much on top of.
Yeah, absolutely. So we are developing a large pipeline with partners that are built on this integrated software offering. There are a lot of places where we're the prime and they're partnering with us to deliver on this. That's led to a lot of productive collaboration that's brought opportunities within the Five Eyes and the US more broadly, where they're the prime and our software can be a key differentiator to going faster. There's also a maturity aspect to this where, to Alex's point, they've tried to build the software that we have and have failed, and that takes 5 years or longer. And so not many of them are coming up to the point where they realize it'd be much better for them as a matter of necessity to partner to go faster.
By the way, on this point, one of the most important things driving our software, but especially in commercial, is, and is that people have tried and tried and tried to build our product. We have a number of customers that we've been able to bring on board this year that quite frankly didn't like us. And it's like, but the product brought them back. And why did the product bring them back? Because the product is actually delivering value that is otherwise not available. And you could imagine 2 years ago, you could spend $1 billion instead of spending 20 million on Palantir. A lot of those people have spent $1 billion. And lo and behold, they're being brought back to this product, often with people that do not inherently want to hang out with us, but the product has brought them back. And in the US government, especially, the US government has tried everything not to buy our product. We had to sue the US government twice. Just imagine how popular I am. They still are buying the product. It's not a love relationship always. It's we bring you back. Our products bring you back. Once you've used Foundry to whatever, all the use cases we talk about, you used Nexus peering, powering Gaia and Foundry to bring yourself home alive. You're not eager to not come home alive. And you will buy the product that actually delivers that, even if the person who's nominally or is actually in charge is unlikable to you.
Thanks, Alex and Sham. Alex, we've had a lot of individual investors submit questions. Is there anything you'd like to say before we end the call?
We at Palantir are individual investors. I really, there are a lot of motivations for fighting to win. Most of them are, I believe, the West needs people fighting for it. I think and know we're uniquely positioned. I have great reverence for the people at Palantir. But one of the really big motivations for me personally are individual investors. I have a lot of respect for the time you take. Whenever I read reviews of Palantir, the person has actually used the product. By the way, we're going to begin to talk to institutional investors. But our primary way we're going to do it is use our product. One of the largest, most important institutional investors is we're engaging with, and we're like, use our product first, and then we'll discuss whether it's differentiated, the unit economics, the margin numbers, all these things. But it all flows from, do you believe the product is actually differentiated? Are these products the best in the world? Can Microsoft, Oracle, Amazon, Google replace these products quickly? Those are the kind of questions. And the people who spend the most time on those questions are individual investors. And I have a lot of respect for that. And you're one of the many reasons that we fight.
Thank you.
That's it.
All right, raw thoughts, Sachin. What do you got?
So I think first point is like, I mean, I see that people are saying that they're growing 26%. Is it good or bad? So let's set up the baseline first, that why it is good or why it is bad. See, we discussed last time about Databricks. I mean, that time I quoted a wrong figure, but you say they have like 1 billion in revenue. Their market cap or valuation is almost twice. Snowflake has less revenues. Their market cap is larger than that. So they are undervalued relative to peers. That is one. The second is their revenue, when we see in terms of growth, is, like I said, that most of the revenue at this time is still going into data platform part. So the revenue is still growing less than at least whatever we call the peers. Okay. Their brand presence issue in B2B, we have discussed several times that a lot of people still don't know about them. That issue is not resolved yet, despite the effort. They themselves said they want to make it self-service. They want to make 10-tier offerings. They want to ensure on-demand access to developer, but it is not done yet. While other companies have, even some of the starting companies have. They have shared that they have so many modules they can plug and play in a lot of different ways, but yet they have failed to provide like a focused mass market product, which they said they should be doing themselves. They introduced data mesh in Japan, and the idea that time was that let's bring a compute to the storage. The data mesh hasn't come outside Japan yet. They have nearly 2 billion cash in hand. 2 billion cash is too much. I mean, you can simply see that 2 billion cash is pretty much the same the revenue they are going to. So the cash deployment, in my view, is pretty defensive. It's the lack of ideas they have for GTM to deploy. I don't know. Profitability by 2025, not good. Not good. My view is that they are playing too safe, and I always believe that playing too safe is not playing at all. Okay, this themselves said that their revenue growth, I mean, they will prefer a lower CAGR but with more certainty. I mean, this is a defensive deploy. I mean, you are playing in a sector that is growing double digit CAGR in all guns blazing. Yeah, I think we do not need that kind of idea. I mean, if you want to play too safe, probably that's not a right time to do it. They said that they are engaging with institutional investors, but then they said they want them to use the products. Institutional investors don't work like that. There's a different framework. I mean, I'm a director
But
with a fund.
I thought that was actually pretty cool. He said that like they want the banks to kind of use the product and then
No,
invest. Like,
institutional investors don't do investment like that.
but with this one, do you think it would be a unique scenario where like Bank of Montreal, that I know is one of their biggest investors, uses the product more and then they feel comfortable buying more because they see
No,
the
so
value of it?
institutional, see, they have a fiduciary duty and there's a framework how to invest. Okay, that depends on their own due diligence, their market research, as well as the research and analyst reports. Okay, institutional investors just don't buy something because they see a product. Okay, because see, something goes wrong, people will put, if you do as an institutional investor, if you do something good, people will not say anything to you. But if you do something bad, people will come after you. Okay, so the way the institutional investor work is very different. Okay, they want like 20 or 30 or 50 people to recommend them to buy a stock, or they will buy a stock when everybody else is buying that stock. This is not how institutional investment works. Okay, so just setting the baseline, like, so this is why when I see a 26 or 30% growth and I see the market, I see a lot of money is left on the tables. The problems they have been saying themselves since Q1 2021, they are not being resolved yet by their own words. Okay, the growth, I mean, they themselves said that the company is built for uncertain times. When you are built for uncertain times, why you are so defensive in uncertain times? I think that is a bit of contradiction in what they say themselves. My impression is that there is a sense of complacency that I get, is that somehow their view is that they are doing very well. Their view is they are growing very fast. Their growth is pretty good, and when we see it related to peers, we don't find it that strong. Okay, I think that is, if you address and you say, okay, this is the issue I'm having, for example, like a cell service or thin tier module, and you have been saying it for more than 1.5 years now, and you have been in the industry for around 18 years and it is not sorted out yet, yeah, I think you should take some blame for that. Okay, every Tom, Dick, Harry company that is coming to market today has a thin tier offering. So with 2 billion in cash, with one of the leading company in data and platform space, if you do not have a thin tier offering, I think it needs it needs some sort of introspection.
Before I get to Chris, is there any thesis changing things that happen in this quarter for you?
See, the impression I get is that I have to tone down my projection for Palantir. I mean, still it's a good company. I mean, they can still sort out some of the go-to-market issues they have. Okay, they have been delayed on that. They still have a lot of cash. They're not going bankrupt. I mean, their revenue growth in US market is increasing. Okay, I mean, one of the chart that they are showing on the shareholder letter, where you see that US growth revenue from new customers, and it looks very sexy. But guys, we need to remember, I mean, it looks sexy because 4 years back they were not even having enough people to sell to Salesforce. So it's just a normal investment in sales that is giving it. Is it better than peers? We don't know that part until and unless, because what matters is the top line, and top line is the revenue. Okay, if you have revenue, if your revenue is not growing, it doesn't matter what kind of financial engineering and how the capital allocation is done internally. The revenue, see why Amazon became such a successful company, or why Google became such a successful company when people on the Wall Street were writing obituaries about these companies. And yeah, because they were pumping revenue like anything. When we talk about today, like Facebook or Google, or I mean, these are like cash generating machines. In software and SaaS business, there is no bigger metric than revenue. because this is a business by nature, by design, is a high operating margin. Okay, you can scale it fast. So that is the only one metric if you have to look for Palantir is the revenue metric. Okay, and if you don't get it right, yeah, I think you're missing the magic here.
Chris, thoughts after Karp? Anything Karp said that stood out to you?
Snowflake and Databricks are going to eat Palantir's lunch all day, every day for the next 10 years. Palantir, officially, in my opinion, is no longer a SaaS company. They're a defense company with a little bit of commercial offering on the sideline. Clear as day, you can tell all the products that they have, they're all geared toward defense, right? If right now this company doesn't split itself off into the commercial side and tries to hobble that commercial side along with this defense thing, it's not going to work out. I'm telling you right now, they need to split the company, do it now before you keep trying to integrate. The fact that he had to outright say people hate us on a conference call, they don't like working with us, but they're forced to because we have a great product. Well, guess what? You need to change the mindset. Take the commercial, take it out of the equation, let it stand on its own, let it have its sales force that actually can sell the product and actually make the product a thin version like it should be. If they don't do that right away, literally Snowflake and Databricks, who hasn't even gone public yet, is going to eat their lunch. All right, based on what I even read on a lot of their slides, they're like, oh, we don't even focus on small customers. We only want big customers. Okay, guess what? Databricks doesn't care. Snowflake doesn't care. They'll go after every single customer they can possibly get because eventually those small customers become mediums, mediums become large, and the large becomes mega companies. The fact that Palantir right now can't even get companies to work with it on the large side, not a good look. And especially right now, every future projection that he just outlined was pretty much all growth on the government side, very little growth on the commercial side. So I don't know what their intentions are with trying to keep this amalgamated product together, that they want to call a SaaS company, but they're not a SaaS company. They're a defense contractor with some SaaS offerings on the side.
You didn't feel anything when they said their software is highly differentiated, other companies can't replicate that stuff? I mean, I know like the numbers aren't great in earnings, and I know Karp was being a little bit arrogant, but do you like to not call them a SaaS company? I don't know. I feel like that's a little extreme given the technology they're offering.
They are a defense SaaS company. Let's go there. There you go. Right? If they're trying to become the software prime, they're not saying we want to be a Microsoft. They say they want to be a defense software prime, right? So go ahead, be a defense software prime. Only focus on government clients. See where that gets you. Because I can tell you right now, it's a much slower growth pattern. Even he hates the fact that he has to do that. I say right now, split the company up, let commercial stand on its own, let it hire its sales reps, let the government side do its thing. Palantir version that we have right now is perfectly fine for the government side. Split the commercial, split the technology, do cross licensing, and call it a day. Don't hobble this thing along that you've created, where you're projecting out growth that's not going to be there. It's got a lot of legacy negative sentiment behind it, and that's exactly why you can't be a defense contractor and a commercial contractor at the same time. It's just even if you look at it from an institutional standpoint, some institutions, and a lot of them, have mandates that they can't invest in companies their primary focus in defense. Go ahead, Sachin, tell them, because they're just say if you're a pension fund with $1 billion, you want to put some money into Palantir, and Palantir is like, oh yeah, you know what? We're also like working on technology that is going to kill terrorists.
Real
There,
quick
you're a
before we go to
defense company.
Sachin, are you still going to DCA, or are you a little bit less? You're not as excited to DCA anymore?
I
You
am
got to rethink
somewhat
it for a while.
reluctant. I got to rethink it. I'm going to have to mull it over. I do think that I wish I still had my puts so I can unwind some of my shares, but it's okay. That happens. And more than likely, I'll probably end up DCAing into Snow, like I was talking about on our podcast. And like I said, for me, my intention was always, if Databricks goes public, sell half of Palantir, buy into Databricks. That just turned into sell 75% of Palantir, buy into Databricks. I'm not one to hold on to losers for a prolonged period of time. My capital is worth way more to me than, giving money to a CEO who obviously is pounding the table because he's frustrated on things, right? That, like, you could hear the pounding on the table, right? But I'm telling you, that's the difference between someone who's business minded and someone who's idealistic. Alex Karp is an idealist. He's not a business guy. He never was. He's been a CEO and he's founded a great company. He's able to get a whole bunch of smart people together into one room and build an amazing product. But I don't think he knows how to commercialize the product the same way other people do. And that's no fault on him. Trust me, everyone's got different different ways of doing things. I think right now Alex Karp could do very well in the defense side. He's got the ideal mindset that you want to have on the defense side. But if at the current way that I'm seeing Palantir, its commercial prospects are much, much lower than what a lot of people are expecting. And that's why the total addressable market for Palantir just got really small. Really small.
Sachin?
No, I agree with Chris. I mean, if you want to be recognized as a commercial SaaS company, okay, I mean, I do rate them as a SaaS company. I mean, but their growth is nowhere near to it. Okay. My view is that, like I said, I mean, they're coming up very defensive. Okay. I don't know what's the reason look for that. I mean, if you see, few reasons we like Palantir is that we talk about Peter Thiel book 0 to 1, okay, which talks about like how to build the monopolies. Okay. And when we talk about Peter Thiel example, I think the one company that embodies and everybody talks about is a Palantir is built on the principle of 0 to 1. If it is built on the principle of 0 to 1, it is not adhering with it. Okay. That's the one point. The second is that, I mean, who has got more hate than Elon Musk? I mean, people have made joke for him for 20 years and see, look at what the guy has done. And this is why, I mean, I have been always saying that, I mean, Alex Karp, I like him a lot, strong CEO, but definitely not Elon Musk type. And so that's the issue. I mean, people don't like you. So what? People have to buy your product. See, I'll tell you an example of the Oracle. Like when I talk about senior executives about Oracle, people who are using Oracle, they hate Oracle. They say it's a company with a very poor service, customer service, very terrible attitude and all that. But they use it because a lot of time they do not have solutions for it. So that is not an answer that people don't like you. I mean, people don't like you. I mean, but a lot of people don't even know you. What's the solution for that? So, and as long as I think the US government scenario is concerned, I mean, it's the government is not going to change in next 2.5 years. So it is what it is. So commercial, everybody see any number you see, when you talk about like digital twin market, when you talk about like IoT market, data platform, data mesh, data fabric, everything is like growing at a 15%, 20%, 38%. AI is growing like 40% per year. So when you are saying that you are a company that is going to put all of this together to solve the problems which no one has solved yet, and a lot of people have not realized yet, a lot of time the example comes to me that, have you ever thought that you might have a problem which you are not able to realize yourself?
Hey guys, I gotta head out. I'll see you later, all right?
All right, Chris. Thank you.
And take care. Stay safe.
Yep.
So, I mean, I'm
Sachin,
not
what
selling.
what did you feel about profitability 2025?
It sucks. See, you don't build software monopolies with the consistent CAGR growth and meeting guidance. No big software company is built by meeting guidance. Companies become great because they crush guidance quarter after quarter. Okay, I mean, if you talk about the heydays of Amazon and Google, no one has ever projected them to become $1 trillion company. I mean, people didn't even projected them to become $100 billion company those days. So how they are so big? Because they crushed quarters. I mean, like anything. So if you are going to deliver as per your guidance and your guidance is softening over the time, yeah, I mean, you will become a niche company only. Okay, I mean, you want to sell to biggest customer, but you also need to realize when you want to sell to biggest customer, a lot of selling you do is top down, and top down takes time. Okay, and
But
when you
do you also
deploy
think that
these,
they're at $10? Like, I do feel like this is a little overreaction. I mean, to assume they're not going to get to 20 in the next bull run as they show decent growth, right? Like, are we freaking out a little bit here, or are you just saying macro you don't see them becoming $100, $150 like a true 10x from here?
see, two things here. I mean, do I see them going higher from here? Yes, I do see them going higher from here, because right now we are in a beat 'em up macro, and the macro improves, there will be a macro. But that is the thing. There is a sector. There's a sector alpha, there's a macro alpha, and then there is a company alpha. What we are worried more about here is the alpha that comes from the company. Okay, if sector has to take the stock price up, or macro has to take the stock price up, I mean, then you can buy any company or a basket of company. The reason we are so heavily invested in Palantir, because we feel that the company alpha is going to be far bigger than these two. And with these kind of earnings, yeah, I think you should not beat yourself too much. Okay, but you should also not pump yourself too much. I mean, when every other indicator is looking different. Okay, we want to understand what will it take for Palantir to be a $20 billion revenue company by 2030. You are sitting on $2 billion cash, you are sitting on zero debt, go to market, raise another 2 billion, put that money, go into a steroid mode growth. What is stopping you from doing that? Because you are doing it because you feel it's safe. Yeah, so see, we need to understand like that this is also a difference between a Snowflake and Palantir. Palantir had years before they started seeing any growth. So their baseline of growth is very different from companies like Snowflake and Databricks, who became popular right at the time of their launch. So if you have seen like a growth like this in last 3-4 years, and you're already saying, oh, it's more than ever we have seen, okay, that's fine. But have you seen the growth of other companies in this space or during that time? If that growth is higher than this, the question for you is that we started 18 years back and we are still growing less than some of the companies are in the same space. Yeah, I think to me, that's leaving money on the table. Okay, I mean, I'm not selling anything, but if the Q3 comes up like this, then for me, the idea is very simple. I'll probably adopt a very aggressive covered call and selling puts kind of a strategy on this company, because see, a company that is growing as per guidance and within a range, they are the best companies for covered calls and selling puts. So if that is the future of this company, then better this be an income generating company rather than an investment in that particular case.
Yeah. Yeah, it's very interesting. I do think that it's a hard macro, and for them to put up the numbers they put up in this macro, it's not necessarily bad. Now, I know you were talking about 500 million and crushing that stuff, but I also think it's just like it's a tough time. And at the end of the day, this is a discretionary product. This is not a product that you can just buy willy-nilly, right? It's not literally the thing organizations need the most. So there is a sales cycle that they have to go through to get people to believe in the product. And that's why I think Karp was banging on the table, because he was ultimately getting annoyed at analysts asking why they didn't hit certain numbers. And he's like, look, we're in the middle of a recession. The government contracts are getting pushed out. I know we said we would do 30%. We will eventually average 30% over time. But there are some years where it's going to be flat.
See, I'm in that B2B cycle where Palantir exists. Okay. Yes, there is a recession, but how you are taking advantage of that recession, I mean, that part is not very clear to us. I mean, you attack recession with new products, new strategies, new clients, okay, new ways of engaging your customers, because you wanna protect your investment and you wanna protect your revenue. Okay, we haven't seen that yet. Okay, so yes, it's okay. I mean, things can happen, but they're playing too safe, Amit. Okay, I mean, if you have to play this safe, yeah, I mean,
what do you think they should be doing with their $2 billion in cash?
They should be acquiring new customers. They should be releasing new products. Okay, they should. I mean, see, you need cash. Why you need cash? You need cash so that you can go through with tough times. I mean, there is no tough time on them. They are actually growing in revenue. Why you are sitting on that much cash? Why you don't deploy it? I mean, last year they were at least deploying it in a spec. Okay, it doesn't matter how the specs turn out, but they were trying things. Everything you try will not work. When they were trying a spec, they were actually trying to find new kind of customers. So it didn't work for certain companies. It's fine. That's okay. In business, everything doesn't work your way. Sometimes things turn around in a longer time. That's perfectly fine. But what is disappointing is that they're not trying things. They're playing safe. And see, he himself said at one point that they prefer lower CAGR revenue with more certainty. I'm sorry. I would always like to be with the persons who want to play. Okay, yes, it's okay to have volatility in revenue, but let's go for the juggler. When you have the best product, they themselves said that so many times, and I mean I can witness that the product is so fucking good. Then why play safe? I mean, if you don't go for juggler when you are the best, then I mean you have to blame yourself. So in this particular case, I have to be very clear that their go-to-market strategy is letting them down.
Was 4.5 billion in 2025 something you had on your radar, or you thought it would be more in 2025?
No. See, I like when I wrote my first article on Reddit about Palantir, I said that what I am looking is 50% year-on-year growth on revenue. I can give them 10 quarters, okay, before they reach that point. Okay, I mean they're like 6 quarters down. I mean if they are not a 50% year-on-year company by the next year, this win, yeah, I mean this is not a company I'm looking to invest. I mean, yeah, you'll have a position, you leave it, but this is not a company you stay too excited for. Okay, so I mean, I'm still not doing anything on my position. My position is still very large. Okay, but I have raised some red flags in this quarter earnings. I have raised some red flags last time also. 26% year-on-year growth in this market, despite whatever is going on in macro. Yes, there is a macro effect, but forget that effect. Try to evaluate your own position, that how much market you could have captured. Okay, and I mean, better to put effort on that. See, they are hiring a lot of people, and it is fair to say that that this will have some results in coming days. But they also hired people last year, and at least some of that impact has to come in now. Okay, and what we are seeing that 26% revenue growth is not what I'm in for. Okay, I could say, I mean, I probably have misread the company. I probably they may be happy. I'm not sad with 26% year-on-year growth. I'm sad because with this growth, they think they are hitting all the targets. That is what is more disappointing.
They grew 41% year over year last year, right? I think like the whole I think we have to see what happens in the next 2 quarters, right? Because if we have expected governmental upside because of the Russia-Ukraine stuff, which is basically what Karp was saying, even though the government contracts are getting pushed out, that's not commercial. That's getting us to that 40% growth that they did last year, which is, I think, your biggest concern. But at least it would get us there, which is why I think Karp was saying at the end of the decade, they're going to have 30 to 35% year over year CAGR. It's just some years they're going to be flat or negative. And I think your point is like, that shouldn't be happening at all, right?
No, I mean, see why your growth should be negative or flat at any time. I mean, you have the product is done, product is there. Okay, you have people selling product, you have people sitting in governments for last 17, 18 years, you have context there. So this should be the time when you need to go exponential. Okay, if you are saying that there are going to be years like that, no. I mean, my point is very simple. Like, I'm not sensitive about government or commercial revenue. Like I said, I focus about total dollar. Okay, tomorrow the total dollar comes from government or total dollars come from commercial. I really don't care.
Yeah, same.
Okay, I mean, the way I look my investing is a bit different. I mean, my worry is, see, I need to understand what you are doing to increase your bottom up sales. I don't have the answer of that yet. I want to understand what is the timeline of a self-service and on-demand access to your product. What your next 10-tier offerings will look like. Okay, what you are going to do to improve your brand presence in B2B sector. Okay, how you are going to plan to deploy 2 billion cash in different scenarios, at least a broad timeline to that. Why you are not chasing 50% year on year growth? Why you are not chasing 100% year on year growth? Why? Is it because of the issue of the market? Is it because the product is not that high, you don't have enough people? We want to understand what is the cap of the market, because 26% is not the cap, because if it is the cap, your peers are growing faster than that. So
do you think
it's
that
not-
happens in 2024 when they land, expand, and scale? Do you think you just have to give them that time to kind of get there?
See, they are already on that timeline, because this is the same discussion we were having. I was having with different investors last year also. Okay, also their consumption model has changed, the way they charge to their customers. Okay, they have reduced a lot of upfront costs, which means that they can start charging their customer as soon as like second week, third week, fourth week. Okay, so earlier, the customers have to pay like quite a significant upfront fees. I think that has gone down. Okay, but if you remove the upfront fees or you lower the upfront fees, which means your SaaS revenues should kick in very fast as well.
Yeah. Okay. All right. I think that's a lot of stuff we discussed. So
See,
first of all, let me make. Go ahead.
It's a very simple way to look at it. They say that their product can help companies to when they are in deep trenches. A lot of companies are in deep trenches. They can do anything to come out of these trenches. So if you're not able to sell your product at this particular time at an expedited rate, and you're saying macro is holding us back, yeah, something is not matching.
Yeah.
So what will the condition I will sell Palantir? If Palantir delivers less than 30% year on year growth for another 3, maybe 4 quarters, I will start selling covered calls at the money, and yeah, that's it. Okay, that's pretty much my ideas.
We will see. Couple of little announcements before everyone goes. First of all, 762 people being here. Thank you so much in the chat. On the pinned link on this stream is a new website that has a lot of audio content for Palantir. It is a new startup I launched. It's called Audea. So audea.io/daily Palantir. I would really appreciate if people sign up. If you are looking to get audio updates around Palantir, there's like over 1,000 pieces of content there. There's a lot of content on Palantir. Please sign up for that website and you'll be able to get daily updates for Palantir. I'm uploading daily on the website. There's also an app on the Google and iOS App Store you can download and listen to podcasts essentially around Palantir content. It is my new startup. I would appreciate it if everyone checks it out and downloads it. Number 2, I know this earnings call was not the best for everybody. I know the numbers were a bit disappointing, and I also know that the tone expressed by Chris, more so than Sachin. I think Sachin's being just a little bit more, level-headed. Chris was a little emotional, and Chris kind of got everyone upset. I think one of the things is just to remember that these things take time. If you do believe that this has a Tesla bull case associated with it in the context of data analytics, Tesla had a lot of years like this. Tesla had some disappointing quarters. Tesla had some times. I'm not saying this is the next Tesla. I am saying that this is a moment to just think about it. This is a moment to just calm down, not be super emotional. I do think at a $9 price, it is incredibly undervalued because the macro is beaten up, and we're going to see if Palantir can grow into their valuation as they grow over time by being able to deliver this 30% CAGR. We're going to see if it happens. We don't know if it's going to happen, but I am bullish and confident over the next 2 years that they're able to get their stuff together, and that could happen. But I think at this price, selling is, you got to think about it. You don't want to be super emotional like this, Chris, with his puts and stuff like that. You want to really think about your strategy before you do anything. And you want to make sure, is this still a long-term thesis? If it's not a long-term thesis, then yes, you have to do what you have to do. If it is a long-term thesis and you want to see a couple more quarters, then I think you also have to see that as well. Before you decide to do what you want to do. I know that the feeling is not the best. I know people who watch this channel are very into Palantir. it's quarters like these in a recession that I think you really dig through the numbers. From my digging through the numbers, I don't think the growth is bad at all. Is it the growth we wanted? No, but we're also approaching a recession and things are getting rough, and there's other things happening geopolitically in which Palantir might have a lot of upside to it because of that. So I think you have to take a lot of holistic views into account, and that's what I'm going to be saying in the videos that come up on this channel in terms of my analysis on what happened on earnings. But overall, I think you gotta analyze the numbers, and I remain bullish. I want to see what they do over the next 2-3 quarters if they're able to ramp this up. I agree with Sachin ultimately that if they have $2 billion in cash, they should be putting it to work. And if you're putting it to work, whether it's hiring new salespeople or whatever it is, being more aggressive would be nice. But we're gonna end up seeing what happens. Patience is a virtue, as Theo says. Patience absolutely is a virtue. All right, that's pretty much it for me. Sachin, any last thoughts?
No, I think just overall, I think I can understand and have a sentiment. I mean, with all the Discord groups and Twitter and the chat here is, see, that's the point of the investment. I mean, we had a thesis. I think everybody has to. That's what I always say, that please write your thesis while you're investing in a company, and please do seek a lot of information that disprove your thesis, because a lot of time we end up looking for the confirmation bias. Okay. No company is guaranteed to become great. I mean, companies have to work hard to become great. And it is time for Palantir to actually bring that metal. Like I said, I'm more disappointed that they felt that they can do very little to actually improve on these numbers, which more market constraint and customer constraint, rather than I think they should have come up with that what they are going to do to improve these numbers. If Palantir is not growing 50% year on year in revenue by Q2 2023, I'll be out of this company for sure.
Okay. And just to make it very clear, I am not selling. I know people are saying I am.
No, I'm not selling either. I mean, I'm not selling either.
Yes, if I was selling, I would make a video and explicitly say I'm selling. I am not selling. I'm not sure if I'm going to buy the dip today. Might put in a little bit. I was looking to get it at 7 or 8, so I'll see. But I'm absolutely not selling. So let me make that very clear. All right. Thank everyone for joining us. Again, there's that pinned link in the description. I would really appreciate everyone signing up and checking out the audio content on that website. It could be your go-to hub for Palantir content, audia.io/dailypalantir. Thank you so much for joining, everybody. And a lot more coverage will be coming. Our Palantir Weekly podcast this Friday. We'll be talking more in depth about it, and we'll go from there. Thank you, everybody. Bye-bye.
Hey, thanks, guys. Bye.